a minute.
Good morning. Anybody hear me?
Hey, I'm here.
Yeah,
Just
morning,
volume.
morning, Ed, Mark, everyone, class.
Morning, Ed.
We had a rocket ride this morning. You guys watch it?
Yeah, I was there for it.
Morning. Yeah, market moved around pretty briskly this morning. And it's still moving. It's still a little bit on the jittery side.
Yeah, I put my autos on and it pretty much cleaned up.
Mm-hmm. Yeah, forward momentum is always going to make them work. Well, all right. So we've got a cleanup bar, what Ed calls a cleanup bar. It's a bar that's got spans all the way up to the top and all the way down to the bottom. And now guess what? Smack dab right in the middle. Not necessarily good for us because we've tapped all of the support and resistance lines for the morning. And not great. Now, news this morning that caused all of the havoc is the consumer price index. Grab that, put that over here. Let's grab this, put that over there. Where's my economic calendar? There it is. Let's push this back. All right. And today is Tuesday, the 4th. Click apply. I've gotten used to doing this, selecting the particular day that we're looking for and clicking, instead of having to scroll through, it makes it a lot easier. And you can actually adjust this by your own time zone. So today is the 14th and a whole whack of news at 8:30. In fact, one of the brokerages that I have sent out an email last night that they were going to be increasing the margins to be able to trade the increased volatility for the morning. We got a decent amount of news already reported, and the next news that we're going to be getting is around 11 o'clock. If you're paying attention around 11 o'clock, if you're still trading around 11, be careful. And we got people speaking in the late morning and late afternoon, or mid-afternoon for that matter. So most of the news is out of the way. We still need to be careful. And the market is still really jittery. You know, you see it moving around and doing its thing, right? And it's found its home, right? It's right back not far from where it started off. They just went up to the top, loaded up, and then came all the way down, and came to the bottom and went up. Usually when there's a news announcement, they like playing both sides. So it'll typically go in the direction that they don't go in at first. So it'll go up if it wants to go down. It'll go down if it wants to go up. They load up before that they go up in the direction. This morning, they went down, they went up, they went back down, and now we're sitting in the middle over here. Makes it a little bit difficult because all of our support and resistance lines, the hard lines, have all been touched. So we're kind of going to be struggling a little bit with this. remember when you're trading, you should always have your dome open. When you've got your dome open, pay attention to the number of people that want to participate with limit orders on the bid and on the ask. If you see them below 50, be careful. There's lots of volatility in the market. Normally, the when we get a specific bar, news announcement, we get maybe 3-4 inches worth of movement. Well, this morning, look, we got almost the entire chart starting from 832. You can always tell how fast the bars are building. Look down here at the bottom at the time, right? So you're getting 3-4 bars every second down here, especially right against the news. Even when you go a little bit further, look, it's taking 1 second to build the bars, right? Make sure that you're always paused in here. I like the last feature that I added to it, where what I'm doing is I'm blocking off that 8:30 time, because it's easy to get caught in it. You get caught in this, you can get really hurt. I have one of my programming customers. He lost $3,000 on a trade, and he likes giving it lots of space. He got caught in one of these news announcements that he wasn't aware of, and the market spiked down. So he calls me up and said, Tony, I lost a week's worth of work over here. Can you put some extra coding in here to stop it from stopping me out when it does this? I want to get out maybe a bar or two later. The problem is, when this type of a spike happens, all of the orders kind of disappear. And what happens is you end up getting out where everything's kind of basing out at the bottom. So even if you do have a stop in place, it can still hurt really badly, because it's going to ignore it. Remember, it's best fill once we start trading at your price level. And if there's nobody there and they've slammed it down, you get stuck with the lower exit on a long, or the higher exit on a short. Most important thing to do is pay attention to the actual news and know when these scheduled events are happening. We can't control all of the events that happen, because we're trading the market. Something can jar it, but most of the time, all of these big announcements that are going to jar the market, they're available for us. So if you're trading, in addition to making sure that you're trading with stops and to targets for the day, it's just important to keep track of where the orders actually are. I'm sorry, where the announcements are. I'm going to turn this thing on. I'll let it take the 3 bars in the direction of trend. Most of them seem to be working right now, and the market's moving jittery enough for us to be able to benefit from these moves. So I'll just let it do its thing if it does.
Tony, may I ask a question about the charts, please?
Always.
So notice that your 30-minute chart is the same as mine. That 9 o'clock bar spikes all the way up past 85 and down below almost, to 30. Yeah. However, we don't have any data on any of the other charts matching the 85 or the 32. Can you just speak to that momentarily?
$85 up to the top. 32 should be somewhere down here. You don't have that movement?
I have a high of 85 and well, 86 and a quarter, and a low swing about 31. I do have a blue line. Yeah, I have a blue line at 30 and a quarter, and I had a blue line at 85 and a quarter, and that comes from about what's that date? From the 7th, and the other blue line comes from the 7th, also the 7th. It was a barrier that it tried to get through. Looks like almost two sessions. It first hit it on the 6th, came down, hit it again on the 6th again, and then finally blasted through it at the end of the day on the 7th. So I had blue lines all over there. And if you're looking at something like this, and news events that will move the market, like consumer price index, FOMC, stuff like that. And if you're trying to guesstimate, well, how can I trade that? Because these are massive moves and humongous targets. The first overall prevailing factor is you got to go 1-to-1. Okay, so that means you have to be willing to accept the forward excursion and the backward excursion as being equal. But what you need to do is know what direction. So if you're trying to wag the direction, think of, well, which is the cheapest direction first? So if
what
you
does
look,
cheapest mean?
Well, it means that where's the inventory currently where there's stops and already a lot of distribution that it can return to and accumulate contracts. So it was to the downside on this event because we were steadily climbing up from about 1 o'clock in the morning, steadily climbing up and climbing up and climbing up, and then the news event hit. And so it fulfilled the downside first because it was cheaper. It had already distributed so much. There were stops all at these different levels, all the way down. Less expensive to take that. And then, as people reacted, and a lot of people, just jumped short. Even institutions all jumped short. When it ran out of the inventory, which is down at around where that blue line was, around 30 and a quarter, something like that. It did a 360 and did the upside. And it was a rocket ride both ways. So getting the direction, initial direction, is most important. It's not going to come easy because sometimes they don't do it, and just because, we have this little guide rule, this is one I use, doesn't mean it's going to fulfill. So you have to kind of like say, well, where's my max loss? So knowing that it swings 5 boxes, and sometimes, it'll swing a 5 box, pass through one, into another one, that's 15 points. So, you have to decide, can I handle a 15-point swing? And knowing that on the plus side, you have to get that 15-point target or very close to it. So playing the news is very difficult. And I don't recommend you do it maybe in a couple of years of watching it happen. But that's how you can guess, like Tony said, you don't know which direction. Well, one way to do it is to know where the prevailing inventory already is, or the cheapest place to go first to accumulate back everything that's been distributed, and then to run up on those profits. So to directly answer your question, I've got blue lines on those areas going back to the 6th and the 7th of February. And on my 30-minute chart. And we're about to, the highest point right now is 41.93.75, and that's from the 3rd, and the next highest point is 42.08.50, and that'll be above R2, and that's from the 2nd of February. The lowest is the 1st of February, and we haven't hit that, and that's way down there at 40.48.50. The most recent one is 40.60 and a quarter, and that's from the 10th. So will we hit that? I have no idea, but it seems to have stabilized at 41.30 area, and that's, like I said, that was a chop zone on the 6th and the 7th until it broke out at the end of the day.
Leaf, I've got a question for you. If you right-click on your chart and you go all the way down, 4th from the bottom, you see where it says reload all historical data? Is yours grayed out or is yours black?
It's black. I reloaded and it did pop in, so I'm good. Thank you.
So sometimes if you look like you're missing data, just right click on the chart and reload it. Sometimes this is grayed out. If you're missing data, we're out of luck, because what's happened is the historical servers are down for momentarily. Eventually they'll come back and you'll be able to reload it. But if you weren't there to see the up and down, and you're loading up your charts and it's missing, unless you've got the reload facility, yeah, we're kind of out of luck. All right, so I've got a horizontal line sitting at 37.75. That's the line that we broke down from. We haven't had a nice clean push down from the zone that we were in. Somebody wants in. There he is. So ideally, we'd like to take a trade from up around 40. The top of the top of the robot box is the area that is of concern for us. So the top of that robot box, somewhere around between 38 and 40, will get us back down, heading back into the trend. But market's been a little bit on the wonky side. So today is one of the days where your counter trend trades, you want to lay low on them. The counter trend trades may get you into trouble because there's momentum. So let's, just because we trade a 3-bar doesn't mean that we always have to wait for a 3-bar for a trade. If we're in a trade, we're in a good support area. If the support area is holding, then what we can do with it is we can take a 2-bar back in the same direction, right? But always focus on making sure that you're near a support line. So down here at the bottom of my chart, we've got yesterday's value area low. We danced around the top value area high quite a bit. We went over it and come back down. And we aren't far from this little zone right here that we're holding on yesterday's 30.50. 30.50, these 2 bars that are down here on the bottom on yesterday that were put in towards the after 2 o'clock. So if it makes its way down in here, maybe we can try it counter down here, because we've got a couple of hard lines with the pivot and so on, but I'm not holding my breath for it to bounce up. We'll see what becomes of it. Whenever you've got this big cleanup bar that Ed talks about with the big wick on the top and big wick on the bottom, it's grief, because all of our lines in and around this area, they've all been touched. And usually the first touch of them is the one that you want to be trading. You don't want to be trading the subsequent ones. So it's either that or we're stuck with the building support and resistance that we've got.
I got blue line at 41.30 1/4, and then we got the primary pivot 5 points below that. So keeping in mind the characteristic, you may get the bounce, or if we can get a decent entry to go down to it, would be even better. But I don't see that happening till somewhere up around maybe 38.
Time is it? Yeah, it's getting a little bit on the late side. It's still moving decent compared to what we're used to seeing in the pre-market. I mean, we would have cleaned up if we were taking all the trades in here, and this is regular market. So if we make our way up over this support line that we've drawn at 37.50, and we trade up a little bit above it and close back down, if the time of day was different, we would want to take that short.
Yeah, we have a swing zone now from about 37.50 down to about 31.75.
You know, the robot box is telling us what's going on. They're just in the middle of the robot box. Looks like they've parked it here for the news. For the open. Lots of lines, all congested. They don't make for very good lines. So we're sitting here. We're finally trading below the range that we've traded in. Yeah, there's our who got hurt trade. It's given 3 ticks.
You know, it's interesting because at 9:14.46 we had a low, and then at 9:16.18 we had a new low by a few ticks, and then we just had another one here at 9:18.26 by a few ticks. But if you look at the tops, we had a high of coming off of that first one I mentioned at 9:15.14, and then another high by a few ticks at 9:15.38, and then another high at 9:17.30. Let me see, 9:17.12, and then another one just now at 9:20.23. So we have expanding lows and expanding highs, but it hasn't picked a direction. We just double topped just now. So it's ready to expand one direction or another, but it hasn't picked it yet. We got a new higher low inside the swing at 9:21.13 of looks like 41.33 and a quarter or something like that. And here we are back in it again. If it breaks this, it's going to get a lot of shorts in here, right here. It's going to get a lot of shorts coming in. It may pop through the bottom, or it may swing right back up and catch those shorts flat-footed.
We've got the pivot below us. It's a good place for them to go bounce off of. The top of the 5 box is sitting at 34.75. Bottom of it is 41.30.
Yeah, so we're at that line in the sand here. If they pop that bottom, they're going to get a whoosh of shorts coming in. It may continue, who knows, but the cruel thing to do would be to just swing right back in.
They wouldn't do anything cruel, would they?
No, of course not. It's Valentine's Day. It's actually a 3BR if it closes up.
No, I think it's got only two in it. Oh, you're on the 6 again?
Yeah.
Okay.
Oh, that's right. You guys are on the 10.
Tony, one more time, can you explain the purpose of stacking the boxes again? I know it's the 5 box. Can you go over that one more time while we...
So Ed mentioned that, mute. I've got another computer. I'm testing an auto trader for somebody that I wrote, and it's just running on the other computer. Sorry for the noise. Okay, so the theory is that price moves in 5-point increments on the S&P 500. So what I've done is I've drawn a box that's 5 points. You saw me draw them up at the top over here. I just find an area. So I go from 85 to 80 and I just draw a few boxes. I draw one box and then I select it, Control C, Control V 3 times or 4 times, however many. So all of these are 5 points. When you scale it, they're always 5 points. So the theory is that we are going to be looking for movements in 20 tick or 5-point increments. And what they tend to do is they go from 20 ticks to 20 ticks to 20 ticks to 20 ticks. And they go to one, another, and you can use the bottoms of these boxes as support and resistance. So if you're making your way into another box and you close into it, there's a good chance it'll make it all the way down to the next side, bottom side of the next box. So all I'm doing is I've always heard Ed talk about it, and I've kind of not known what to do with it. So right now, all I'm doing is I'm just putting them up here to see whether or not there's anything interesting that's showing up on them. That's all. It may be that these are off. I mean, Ed, I've got these things drawn from the big robot box that we had with a high at 4140. Is that the right place to be putting it? Because it looks like they're straddling the bottom of the next 20.
Well, they did the cruel thing. See, they peeked out the bottom. They got the slew of shorts in, and now they're pushing
They're
them.
beating them up.
Yeah, they're beating them up to death, and everybody doesn't know what to do. Should I get in? Should I stay out? Because now they made a lower high, but they didn't make a new lower low on this last swing down. So, people are just scrambling. If they're smart, they get out with a break even and just leave it alone until we open. But the 5-box thing, on the 10 range, it's easier to see because one bar, 10 range bar, is half a 5-box. 2 stacked is a 5-box, etc. So you can draw the boxes on top of your bars, but your bars themselves are defined to help you see that. And you just have to follow the stacks, and the bar between 3 of them is the movement bar. So
sometimes though the bars aren't exactly, they're all 10 ticks, but depending on where it starts, they're not going to give you the full 20.
Correct. And it's always within a tick or two. You're never going to get it exact. It's going to be impossible really to get it exactly from bar to bar. There's going to be a tick out the top, a tick out the bottom, an open at the bottom edge, or maybe a close at the bottom edge, and things like that. So when you're starting to look at it, I would say start with the bars and see the pattern of the sideways movement. If you have a box of bars pretty close in size without too much peak out bottom and top, then you can start with that one as your first 5-box. And the next one could go up, it could go down. They don't necessarily have to step down or step up. They can start somewhere, and the next bar could be an up, and then it could run right through that bar to the left, the very first one, down to the bottom. So you have a bar in the middle. So drawing those bars like that, that's a good way to start looking at it. As far as using it, that's another story. It's going to take time of observing. And that's basically what you do in the beginning. Do mostly observing and following what price is doing so you can get a handle on price movement, price action, and the structures it makes as regards the instrument you're trading in. Every instrument's going to be different. If you're on the NASDAQ, none of this applies. If you're on the crude, none of this applies. This is particular to the S&P because of the characteristics of the people trading the S&P, the amount of volume, the size of the traders, and stuff like that.
Thanks, Ed.
You're welcome. So we're coming up to that blue line I mentioned before. $41.30. Yep, hit 41.30 and a quarter, closed the candle, opened, and there's the tap, and now so the next 5 would be down at the primary pivot. There's the tap. See what happens. I've got another blue line at around 18 and a quarter. And as it keeps pushing down through this, there's nothing you can really trade. I mean, you could try it if you want to, like trade the rejection of the primary pivot that just happened, but it's, it's choppy. And we're about to open.
I'm just going to wait a minute or so before that I do anything more. It's already jittery. Look at the dome. Everything's just all over the place. Now we're sitting near our purple line down here at the bottom. We would anticipate it popping back up, but it's continuing to drop.
If you look on your chart, Tony's chart there, you see, there you got that box. And it ran down right to another box. And in between is a 5 box, that run. Yeah, see that? They're stepping down. So if you're looking for a direction of trade, the best direction is, the pullback sells, which you've had already 2 opportunities to do. And now you can,
Where?
Well, the first one was on your chart, right before the open, right at the open. No, to the left, to the left, to the left, your left. Left. There. That was the first one.
That's a pullback?
Well, it's a breakdown on your box. Your box is a
Okay. Oh, I see what you're saying.
Yeah.
Okay.
And then it ran, and then it went sideways, and it ran again on the next box, and it ran.
I never know what to do when it does this. I don't like taking the bar that breaks down because the risk is too high.
Well, the risk is 10 to 12 ticks, right? It's the other side of the box, whatever that is.
Mm-hmm. Right. If it closes back down into the box and we don't get a 3 bar, I'll try it short.
Order filled.
You see, on this one, it came outside the top of the box by
Target
ticks.
filled.
All right.
So that's a good pullback.
Mm-hmm.
Well, if it's going to break down, who knows? What do I have under here? Well, we don't have anything until almost 41.05. Might get a bounce at 41.10 only because it's a 5 point increment, but who knows? I'd have to.
It's been steady down.
Yeah.
First bar that closed down, good place to try to get back in. Let's see if it comes back up the other way. Come on, up you go.
We got a reversal yesterday at 0730 right here at 1475. It pulled back and went down, and then we had that breakout bar at 10 o'clock.
So no new low on this last swing. They came a couple ticks from that last peak that they made. We're kind of in a box at the moment. The top side of the 20 is sitting at 1950. We got 2 robot boxes right next to each other, basically the same thing. I'm going to get a blue bar here. Okay, so the robot box, previous one sitting at 2350.
We have a launch pad here.
To the long side?
Yeah. Yep.
Oh, I'm going to try one counter coming back down. If this closes down.
Order submitted. Order filled. Target filled. Order filled. Target filled. Stop filled.
It would help if I have it on the right chart. Okay. Do that again.
Couldn't resist. I had to do that one.
Okay, coming back up one more time. Give us one more bar up. Tap the pivot. Okay, if I close this up, I'm going long. Tap the bottom side, thinking long to the upside, back up to the pivot. 2 blue boxes. A little bit of selling going on, but
Order submitted. Order filled.
you know what? I need to switch this. So every time I follow your instructions, Ed, I get burned.
No, not true. You just remember the pain. You forget the good. You forget the good
Stop
times.
filled.
Okay. Stopped out by a tick. Stopped up by a tick, and then it goes for double the target. Let me adjust my lines over here. I'm waiting for this darn thing to settle itself out. Rebar short. So we're making a couple of robot boxes in a little zone over here. We're tapping the bottom of it, coming back up, closes up. We'll try long. Came down a little bit lower than our prior swing.
Order submitted. Order filled.
We're in chop now.
Target filled. Target filled.
All right.
Order filled. Target filled. Target filled.
Thank you very much. Trading back to the pivot. We've had a couple robot boxes to the downside. Came up from the pivot, came back down a little bit lower. Who got her trade right in there? Turned out to be a 3-bar as well.
It's not endless winning.
It's not?
No.
Jeez, Ed. Don't burst my bubble.
No, you know, consecutive wins, statistical consecutive win rate counts.
Yeah, thanks for bursting my bubble there. And I thought it was endless winning. Endless winning.
Statistically, when you track your trading, there's going to be a number with your consecutive win rate, and you always got to keep that in mind. Especially when euphoria starts hitting in, and you know you've hit it, and you just keep pushing it. Just remember there's no endless winning. So if you're good for 3, statistically, if that's your number, whatever whatever time you hit that, you should consider letting it stand. If you keep pushing it, sooner or later you're going to cycle back in, and it's going to take it back. Now, it could just be that, like I said, it's Valentine's Day. So the market might be just playing nice, but I wouldn't count on it.
Playing nice. When was the last time that you heard the market play nice?
Order filled.
Well, Ed just said that it's playing nice today, so why not?
Okay. We're playing around the pivot.
Yeah, until it stops you out.
That's really nice at this stop you. I don't know whether or not we would have survived that pullback right there on the line. Let's let it move out of here. It's moving well enough that we're getting lots of signals. Let's let it get out of the zone.
The auto did survive it, Tony. I did.
It did? Okay.
Yep.
So that we had the two boxes down here at the bottom. Both of these boxes survived. And we've slowly been making our way up. But it's not straight up. It's almost never straight up. Let's adjust our lines while we're waiting for this thing to do its thing. Looks like they came down to the purple line. Came down to the purple line, flirted down 5 points from it, or maybe a little more than 5 points, and now they're coming back up. If we can get long somewhere near the pivot, our blue line really is somewhere around in this vicinity right in here, right at the pivot. Got box here, box there. So our most recent box is the one that we want to key off of. So somewhere in around this zone in here would be a nice place to try to hop on back long.
Has everybody made their target yet?
I'm sitting, I need one trade.
I did make the target.
Made target earlier. Not in the room.
I made target and then I gave it all back twice.
So isn't it better just to make your target and just call it a day?
Not when we're hanging out with you guys.
Oh, okay.
No, I made target, then I hit a couple traps, just like the book talked about.
Trying long here. Got some buying going on. Is it going to hold? We're near my support line. I still want it if it closes up.
So our dome is set up with 10 numbers.
Yep.
High and low for inventory.
Mm-hmm.
Is part of it...
In 7, we used to only have 5. I'm sorry, you're saying.
Is there stuff outside of that we ought to be looking
at? Retail
order
only gets
filled.
to see that.
Target filled.
Oh.
There are more. The institutions, they see everything, right? That's how they can decide whether or not they want to go down or up, right?
Right.
They want to. They'll decide whether or not they want to go down or up, depending on how many contracts there. You remember Ed this morning was saying, and actually this is a good time to actually talk about this. Ed this morning was saying we've been mostly going up, so everybody had stops anticipating it continuing to run up from the zone, right? So what did they do? Before that they went up, they came and exchanged everybody's long stops. They forced them to sell and they took their long positions, right? So they had a whole bunch of people down here and then they went all the way up. So they loaded up and sold them on the way up, and then they loaded up at the top again and then drove it all the way back down. So they can see where they are on the dome, where everybody's positions are on the dome. They can see our stops. Our stops aren't, it's not like they see that we've got a long or a short right? They don't see Tony's long or Tony short or Ed's long or stop down there. What all they see is there's a whole bunch of orders down there that want to get filled at a certain price, right? Because that's what an OCO is, right? We have our order sitting there, and if it's basically just a limit order waiting there to be triggered. So what they'll do is they'll count the number of orders to the downside, count the orders to the top, and if it's worth it, they'll go down before they want to go up. So you'll notice that we're going down, right? But before that they went down, they made a maneuver to make some money on the way up. They wanted to move up. So I got 4 ticks over here, and look at this, Ed.
Yeah, well, if you made your target and it's moving like this, find a place to keep a runner, right? I mean, it's stair-stepping. Now would be the time. Well, not now, because now that you see it, it's usually the end.
It's too late.
Right. So you gotta, just gotta pick a spot. But probably the best spot on your chart would have been to the left. That last blue box bar, the last blue box. No, to the left. The one right before it. To the left.
This one?
To the left.
This one?
That one, yes. Because that's the last big stair step. See the cup we turned, and we had that launch.
we turned here. This is where we turned because we were sideways, right. and this is the retest coming back over
right.
here.
That would have been great. That one there would have been great on that pullback, that deep pullback.
Yeah.
Close up. That would have been a great one. But now that's it. Now anything else is going to be really tough because you're asking for it to come way back. So the blue bar breakout box would have been cool, and then the second try would have been that one.
Next time that I get this over here, I'm going to hold it for a runner and just put it up. What I'm going to do is I'm going to take the distance from the bottom that we have over here. I'm going to double it. I'm going to put my target up here. Double the size of the distance of the up and down that we did.
One of the things I used to do is I used to take screenshots of these patterns and I'd put them in the wall in front of me. And I'd look at them throughout, the day. And then one day I'm looking at my chart and I say, oh, where did I see that? And I look up on the wall and there it is. And it kind of reminds me, okay, that's the place. And that's a good way to do it, because this is all pattern recognition anyway. So you got to have these patterns in front of you so that you can recognize them. There was a pretty hot trader called the pattern trader. I don't even know if he's probably dead by now. But and I used to trade with him, and all we did was just recognize patterns, and we screenshot them and put them in front of us on the wall. It's a great way to do it.
I added a line just below 4140. We've got the division between the last sideways and the breakdown in and around this zone. This is more important line. Well, it's an important line from the downside. This is where we broke down from. So we're up through it. If it comes back, maybe we get a 3-bar, come back up. Now we got a robot box up there. We got the POC above us.
Yes. Now, if I was thinking on a long, I would wait for it to come way down to your green striped line, because we hit resistance now at that top green. And if you look left, we got almost the opposite of what just happened to the upside. It happens on the downside. We have a peak all the way up there, and we're hitting pockets of possible resistance now. So I would want it to come all the way down to your green dotted line before I start thinking about maybe another long. And as far as shorts, I wouldn't, because if you look left, we're about to hit a chop zone from earlier.
Order filled.
Right before the open.
Target filled.
Oh, look at that. And that's just me.
This should bounce all the way back up to the top of the box.
So trading to a daily target is probably one of the most important rules to follow, because you will cycle through and give it back. It's just the way it is. It's no endless winning. The best thing to do is to hit your daily target on however many trades it takes to do it, 1, 2, or 3. If it usually takes 3 and you hit your daily target, that's 3 wins in a row, you're done. If you keep pushing that, all the numbers, all the bad numbers start to come into play, statistically, your win rate, exceeding, maxing out on consecutive wins, all that kind of stuff. And then the market itself, as it cycles from chop to run, stair step to stair step. And so trading to that daily target and getting out of here is a good exercise.
Right back up to the POC. See that, Ed? All the way back to the POC.
So, like I heard some few you mentioned, you made it, you gave it back, you made it, you gave it back. Sooner or later, the cost of trading is going to exceed your daily target, and there's actually no point in continuing, because even if you make your daily target again, you're so far in the hole because of so many trades that you really don't make your daily target. As a matter of fact, you wind up negative for the day. And that's a very important thing to consider. Commissions are going to eat up your profits. If your daily target's 250, 300, whatever it is, and it takes you 13 trades or 15 trades, what have you really made? Maybe half the daily target, maybe. And if it takes you 20 trades and you've got a 200 day target, you make nothing. As a matter of fact, it's costing you money to be here. So somewhere along the line, you got to just let it go.
Any questions? I have time this afternoon if anyone needs to get a hold of me. I've got Tyler that I'm doing a lesson for, assuming that he is available. He's not in at the moment at 10:30, so 10:30 to 11. And my afternoon is completely free, which means I'll be doing some programming for Ed.
Oh, whoopee, yay.
Right back down to our line.
Well, in that case, you need to charge Ed double.
No, it don't work that way. Close this up. I'll try it again with one contract.
What we used to do is I would say what I see and say what I'm doing, and then Tony would put it into code language. And then we talk about it.
It's a form of artificial intelligence. Oh, Ed. Okay, looking long here for 4 ticks.
Order filled.
You already made your daily
ticks.
target.
Yeah, I know, but it's too good to look at past that.
Target filled.
Now I'm done. It's really nice. Look at that. Who got hurt trade right at the bottom, closing up. It went from major negative on the delta to positive on the delta by the time it made its way up. And I only took it with one contract so that I didn't give too much back if I was wrong. And there was lots of room from here all the way back up to the POC, which is the top side of the range. If I was wanting to hold it a little bit further, it would have made almost my entire day over again on the second trade. Look at that. So when you're drawing your lines, find the areas where the inflection point is, right? Where is it that we actually broke down, right? So yeah, you got all this stuff in here, and it's all mumbo jumbo, right? And we're sitting here trying to make heads or tails out of it, but really, here's the double bottom that got broken by this drop, right? Right, double bottom broken by here. This is an important line. Over here, we were going sideways quite a bit, and we had a bunch of boxes in here. This one, this one, this one came back. We came up over it, came back, tapped the line, and it went. These are the trades that we want to hold for longer, right? They come, and these trades always have the potential of making it to the opposite side of the range, or possibly even going through. When you're looking at these charts, always pay attention to the areas where they are actually, what they're actually doing. As soon as they go, Ed used an expression about a year and a half back that has stuck with me. When they expand the range that they're in, right? They're getting ready to go. So when they're peeking out the top and peeking out the bottom, get ready. It's going to happen in there and around. So if we take our trade and we pick right, there's a good chance it's going to make it clear to the opposite side when we've got a who got hurt trade when the market is going sideways. So once that you've broken out of that zone by a couple of bars, you see, we had this line drawn at 26.25. Once that they've broken out of that zone, if they come back and retest that line, that's a hard line. It's no longer a dynamic line that we have that we're drawing, and it's like, okay, this pivot, that, okay, this is the consolidation area that we left. So if we can get a trade on that line, you know, usually this is what happens. It bounces up, gives however many times the number of risks that we actually have. So like Ed was saying earlier, you're at a certain target, you know, try it with one. Put in an order, right? Get the first target, right? The move, but you don't take it off, right? And then you just move yourself to, say, -4 and make your way up. On the top side here, we've got a sideways movement right here. Let's not count this big spike that came up. And we're coming up. If we can make a pattern somewhere in this vicinity and then take it out, and we've got another launching pad to the top side. Drawing the structure of the chart is confusing at first, but once you start looking at the charts and you start paying attention to where the areas that actually you break down from, those lines, when you are working towards them, are really, really important. I said that I was going to do it last week. I've got some time now. I'm going to actually I've got an old indicator that I used to use that I'm going to bring over into this, and what it does into our toolkit. And what that's going to do for us is it allows us to put in a number. Actually, you know what? Maybe I should do the. I've got a version of it that will actually do it. Okay. I want to create something that is going to alert us when we get to those lines. So we can be doing something else, and if it gets to that specific point, then we can kind of decide whether or not we want to trade, or we can pay attention for that next 10, 15 minutes when the price gets close to that zone. I'm going to add it to the toolkit. I'm going to find it. The only thing I don't like about it is that when if you find a line that you want to mark, if you add the indicator to the chart, you lose all your markings, right? So I'm going to take a screenshot of this, right, and save it. Sometime today, Mr. Computer. There we go. I save it to the D drive, and the D drive is one of the older platter spinning disk thing, and it's asleep. It needs time for it to wake up when you're reaching to it. So if I come over here and I add an indicator, right? Any indicator at all. Let's come over here and let's add.
So I'm going to take off, Tony. I'll catch you later.
Okay. Thanks, Ed. Let's add the slope. Right.